Good evening, everybody. Welcome to this special live update special as part of the Inner Circle, Inner Circles program. Today, we're looking at the Fed's favorite inflation measure, the US PCE. We're going to see how the market responds. We're, of course, streaming this on not only GoToWebinar, but also YouTube as a little experiment. So I hope that wherever you're watching this, then you can get what you need. If you are watching this on YouTube and there is some technical issues, although it says at this stage it's streaming okay, then of course what we'll do is we'll post a video recording after the event. But wherever you're watching it, you're very, very welcome. Thank you for sharing this time, and massive respect, of course, many of you who are on the East Coast of Australia. This is getting sort of late for you. But let's get into it without any further ado, of course, because we are on countdown. We're 10 minutes to go till that data is released. So I just wanted to pre-frame it. Let's have a look at where charts are right now and all of that wonderful stuff. And we'll see how major assets move as that data comes out. Just this important message, just to remind you, this is for educational purposes only. Please make sure that you do your own due diligence on anything you see here. Make sure you follow trading plans, manage risk on every trading action. That's entry and exits, of course, and make it consistent with your own personal trading objectives and financial situation. Thank you to everybody who said hi already in the chat box. Thanks very much, Wayne. Good to hear, and good to see you here, mate. And yeah, a really good crowd actually tonight. I'm very, very impressed, guys. Don't be shy to say hello, ask questions, any of that sort of stuff at any time. And I'll do my best to answer them as we go. Now, there's a couple of things. Obviously, we're interested in the data itself. Obviously, what we're doing is we're looking at what happens to price actions subsequent to major data release. And as we go through, for the 15 minutes or so after the data is released, we'll talk through a few things as we go. Thanks. Hey, Joe, great to see you, mate. Lita, it must be so late for you. I'm so impressed. You guys in New Zealand are just next level again today, Doug. We've got it sort of slightly more sociable in Perth here. Wonderful to see you all. Now, I'm just going to do a quick flick around. I'm going to talk about PCE data initially, just for those of you who are less familiar, of course. And so it's the personal consumption expenditures. It's an economic measure that measures consumer spending on goods and services in the economy. It is termed the Fed's favorite inflation measure. Question mark beside that. Certainly Jerome Powell likes it, even though he's under a little bit of pressure from Trump. At this stage, it's a key component of GDP. And when compared to CPI, which is obviously its more famous big brother, CPI is considered a more direct measurement methodology, although PCE is considered more comprehensive because it's got a broader basket of goods than would be covered and services that are covered within CPI. As with CPI, there's a core and headline number. The core number excludes food and energy. The headline number is everything included. So I hope that just clarifies what PCE is about. Soft PCE and an ongoing drops in US CPI would be advantageous, of course. Already we're expecting a 4% cut when the Fed next meet in mid-September. There's potential for another 0.5% throughout the year, but obviously if those numbers start coming warm, then that may be threatened. And that's what markets will be responding to. It's not the number per se, it's the implications, of course, on Fed policy. Of course, if it is soft, then it'll be bullish for risk on assets, including stocks, precious metals, and anything versus the USD, which should weaken again. If it's warm, then expect some risk-off trading. We'll look at that when we get to it. Let's just have a quick flick through some other things of note, just so you've got a big picture of what it's all about. So if we look at where the futures are at now, the futures are actually down. You can see they've just diminished through the course of the day. We've got some selling in commodities as well. Crude oil slightly down. Oil is slightly down. Copper's having a good day at the office. And you can see that strength in the USD, possibly anticipating a slightly warmer than expected number. If we look at TradingView economic calendar, which you should see on your screen now, then this is the core number here. So you can see we are expecting a slight tick up in the year-on-year number. The year-on-year number is more important than the month-on-month. And if we look at we have to go down here. So there is the headline number there. You know, see it. We are expecting a slight. We are expecting it to be around about the same. Maybe the markets are pricing in a surprise to the upside, possibly in light of tariffs starting to bite a little bit. But we'll see what happens in the next 4 minutes and 55 seconds, of course. If we look at what markets are doing overall on charts, we'll put some key lines in the sun. We'll start with the US 500, which has really been in a very good place. We hit record highs again last night on the futures contract. Slight pullback today. You can see there on the hourly chart. So I'll put a couple of lines in the sun that I think are of interest. There are one at around about 64.74, one at 64.89. Those are the two key levels to watch. We're going to put this on a 15-minute chart, and then we'll bring it on in there as the data comes. So watch for a move either side of that. I thought I'd put the Nasdaq up, but maybe there we go. Let's move the Nasdaq up here. Nasdaq hasn't recovered quite as well as the S&P 500. But what I've done is I've put the blue lines on the daily chart where the broader support and resistance are, and if we stick to the hourly, you can see there. That's what we're sort of looking at. Those two sort of brown-coloured lines are the moves that we could see either way. Should we get a soft number, then we would expect it to move upwards. A warmer number will expect it to move downwards and potentially test that 23,440. The inner circles, Joe, the inner circles have been a bit. There was a decision made to move to YouTube, so this is an experiment to take it back and do it on GoToWebinar on YouTube. So those of you who are watching on YouTube, make sure you subscribe, make sure you tick the boxes. So Joe, just pop me an email just to remind me, and I'll let you know what's going on. That's no worries. We're just over 3 minutes to go before that data comes out. Let's just see where other asset classes are. Here's the US dollar index, trading within a fairly reasonable range. I'd be more interested to look at some of the single US dollar crosses. Here's gold, which has been bouncing up and down in between. It's made its way back up to over 3,400, which is really important. Interesting price action last night. You can see this on the daily chart. There's the record highs we hit in mid-April, beginning of May, beginning of June, and of course the latest one mid-July. So we're looking to retest that closing high at 34.29. We actually got really close to that today. Yesterday, up as high as 34.23. So it'll be really interesting what happens to gold. So we're looking. This is the short-term range here, and we're looking for a breach to the upside. Let's just put that line up there around about 34.13. This on the 5-minute chart, just so we can see that move in all its glory. And then we'll reassess as we go. Copper, as I said, is having a good day at the office today. It's breaking potentially out of this range. If we get a soft number, we may see copper starting to move significantly to the upside. We'll leave this on an hourly chart because this could be one worth watching, as we are now just 1 minute and 34 seconds away from that being released. Oil's in a short-term range. The other asset class I'm keeping an eye on is Bitcoin. You can see the bounce off 109,480 or 109,486 actually, if we want to be pedantic about it. But you can see the importance of this. We reached this key level at 112,500. So this is the next key level here, which we've tested today. So a a warmer than expected number may see Bitcoin sell off through that level, and that could precipitate some major selling. So we'll keep an eye on this. Looking for a down move there. We're into our last minute now, and we're going to see. What I'll probably do is move to the Nasdaq. If we pop to the Nasdaq, and we'll watch the action unfold. Let's just see. So we're ticking down. Last 37 seconds. So good to see so many of you here. That's really, really impressive. Just as we, I know, and some of you watching on YouTube, don't forget to subscribe and like. Click the like on the button if the YouTube is good for you too. That would be really appreciated. We'll move back here. 14 seconds to go. We'll actually have a look at what happens to the Nasdaq as the market responds live. So that's any second now, and then we'll check out what the data is. Obviously, what's more important is the market response to data, not the data per se. Now we've ticked up. We're not seeing much movement at all. That's really odd. Okay, anything in the US 500? Yeah, a little bit of a tick to the upside. Let's have a look at that data. I wonder if it's coming. And now we're starting to get some buying coming in. Watch for this level on the US 500 at 64.90. That looks as though it's been challenged. Look at the Nasdaq. Now we're starting to get some traction in this move to the upside. Short-term potential test of 23,600. We're now sort of blasting through that. Gold is looking perky, testing 34.13. Perhaps that's the level we suggested we have a look at. Let's have a look at that number and see what it's done. So month on month, we're coming as expected on the headline number. Let's just check out the core number. So if we check on the core number, again, bang smack on expectations, so a slight tick upwards. So that's probably reassuring to the markets in some way, shape, or form. The trade balance number is worse than expected. That's interesting. Just watch for consumer sentiment later as well. Personal spending, again, bang smack on expectations. That's why we're not seeing much of a move. But possibly the market feels reassured that 0.25% is essentially locked in, and 0.5% for the rest of the year. That is what is priced in. Let's just pop back to our charts and see if we're still getting a slight tick to the upside. So I can't remember PCE data as bland as this, or PCE response as bland as this. But you can see they're still playing with 23,600. So essentially, it said it's all good. It's all good, Jack or Donald, possibly. There's the Bitcoin bouncing off that support at 109,486. Wouldn't be interested unless it breaches 11,250. Let's have a look at the some USD crosses. Is the Euro USD? This has been pulling down over the last 3 hours. As we said, it looked as though the market was potentially anticipating a warmer number with that USD strength, but you can see there that it paused at a key level, and it's really going nowhere from there. Let's look at the US yen. Stuck underneath a 147.32 resistance. It's tested that on this candle, so no significant movements in the yen crosses either. What the Aussie's doing out of interest. Aussie's looking a bit weaker. Just keep an eye possibly on this level at 96 to the downside. I think that's probably quite technically important. If you look at the hourly chart, you can see it was resistance here, now support. We're now trading in a short-term range on the hourly chart between 96 and 96.16. High probability trade to the upside for sure. To the downside, I'm not sure there's a massive amount in it, maybe 15 to 20 pips at best. Checking back on the Nasdaq, we're sort of seeing buying. I think the markets feel reassured at this stage, so that's possibly quite good. Let's just check on the CME maybe. Just get the latest group. I haven't had a look at this today actually. Let's just see what the chances are of rate cuts for the rest of the year. Certainly September, we're now at 85. That sort of flicked around a little bit, but you can see from that weaker jobs number, it bounded higher. Now it's sort of almost locked in. What's interesting, so the potential 0.25% to 400 to 425 is what we're looking for when it meets, when the Fed meets on the 17th of September. I think Trump will lose his stuff. If we go forward to December, you can see the expectation. If that's where we're expected to be in September, you can see it is priced in at least one more cut and potentially two. So at this stage, possibly worth checking in with that. What I'll do is I'll just pop this link into, if you give me a second, I'll pop this into chat. So if you haven't got this link, you've got it. I'll do also that on YouTube too. If you give me a second, just to flick between platforms. VJ, Nicola, thank you very much for being here. I hope that that you saw that data. I hope it came through live okay from the TradingView site. So just in case, I'll redo it just in case you missed that data. So here is the headline PCE 2.6, bang smack on expectations, and likewise with the month-on-month number. And if we look up here, then we can sort of see. Where are we? There we go, the core number, i.e. X, without energy or food. Again, almost bang smack on expectations. So that's the data as it happened. But of course, what we're interested in is the market response. Market appears reassured without bounding higher. But this looks potentially good if we just take it out a little bit. Really nice reversal now on the NASDAQ 30-minute chart. Possibly 50 points up maybe to the upside. Be interesting to see how this opens. Watching video when it opens as well. We are expecting a slight tick to the downside of about 0.23. But certainly the NASDAQ futures are better than they were prior to that data being released. It's got a really nice line in the sun to the downside as well. Should we not breach this breakout of this range to the upside, then that's interesting. Back to YouTube temporarily. Did that answer your question, Nicola? I hope Jamaica, I'm sure Jamaica's warmer than Perth is at the moment. But great to see you here, Vijay. Whoops. Let's just do that. Not much general sort of move in the futures, but this is 5-minute delay. I'm really impressed with copper. Let's just have a look at a copper chart. As I said, this looked as though it was breaching it, and we do have a little bit of buying coming. Let's put it on 15-minute chart. I think this is a really compelling chart. Of course, if we put it on the daily chart, we had this tariff-induced drop where the 50% import tax or import tariff was imposed on anything coming into the US, or from the 1st of August. This was just before that. Since then, we found a little sweet spot in a range here, a little bit of recovery. But a breach of this 458 could produce a high probability or trade potentially up to 472. So you can see there how hard it's pushing against that 458 level. So just keep an eye on that. I quite like that. Put back to the NASDAQ. As I said, not a dramatically exciting session post that data. Just sort of really keeping range bound in there with the NASDAQ. Euro USD really sort of confirming that support at 116.56. Not really keen on that as a trade. Just watch the US yen if it breaches that 147.31. And as I said, I quite like the look of the Aussie yen. If we just put it on the hourly chart for a bit more detail, you can see there we've got classic higher lows on this movement to the upside. Let's put it on the hourly chart, just take out some noise, bring it up a little bit. So higher lows as this trend continues, even though it's been choppy, sort of an ascending triangle type pattern here that put us into this range, which kicked off in the Asian session this morning. Since then, we've failed to breach 96.16, but a move through that I think is compelling. So the two charts that we'll keep an eye on for right now, probably the Aussie yen And maybe keep an eye on the NASDAQ as well. Gold has got to be interesting. You can see there we've already tested that 34.13, as I said. A breach of 34.13 sets us up for a potential test of record high again, which, as you can see on the daily chart, would be up to 34.29. So I think that's a potential one to watch as well. Okay, guys. Well, look, I hope that's sort of interesting, useful, and giving you some things to think about. It's been great to have your company over the last 20 minutes or so. I can't believe how many of you here. I'm so impressed. Massive respect. There's such a wonderful group of people I get the opportunity to work with. I'm always appreciative and grateful. Thank you very much for that. If there's any final questions or comments, would love to hear from you guys. And likewise, thank you very much for attending, you guys, on the live stream on YouTube as well. I hope that worked okay for you. Give me some feedback. That would be great. And we shall see you again very soon. Doug, you're so welcome, man. Lita, you're a legend. Thank you very much, Joe. Yes, it was a bit of a non-event, and thank you. Thank you for your compliment that I made it sort of interesting. I hope I give you some information around and about. Thanks, Wayne. Yeah, give me some feedback, mate. Just let me know how that fit in both. And thank you very much for your extra efforts. Right, I'm going to end the stream on YouTube, first of all. And so bye-bye to you. We'll see you soon. Don't forget, of course, subscribe to the channel, like the video, and of course, you can pop into our live updates that happen on Monday, the next one on Monday, and our normal Inner Circle happens on a Wednesday, of course. You guys all have a great weekend. I'll love and leave you. See you soon. Take care of yourselves, and bye-bye for now.